The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, what are we tracking in these markets as we get into the month of June? No doubt weather and wrapping up planting season. Some areas have been woefully behind here, and some replant out there as well. I think that's something the trade is watching. You look over at the livestock sector, cash continues to be king in the cattle trade. There's a lot going there that, all in all, you can't put a lot of logic on some of these market moves here lately, but we're going to do our best to try and sift through this and take a look at things. Joining us for analysis, Jacob Burks with agmarket.net. Jacob, it's good to talk with you again this week, buddy. And man, oh man, I got to say, you and I were chatting about this before we jumped on, and trying to put logic on some of these market moves in grains and livestock right now. It's a bit tough to do, isn't it, Jacob?
And Jesse, you can pull your hair out trying to assess the incremental moves, the small moves in this marketplace with a news story. There's tons of news stories hitting us left and right. I think sometimes it's best to just kind of take a step back, look at, okay, what time of year are we in? It's usually pretty volatile this time of year. You're usually getting some change in directions back and forth. So I think it's something. Logic. We try. We do our best. That's what we're doing here today. But I think that trying to get drilled down and start pointing specific fingers at what is turning this or what news event is happening, you can really drive yourself crazy doing that.
I have to give credit to my good friend Mike Adams. He's filling in for me this week on AOA, and he brought this up on Monday's show. Seemingly, kind of the thought that, the old weather scare in the markets, it almost kind of feels like we can't put a weather scare into these markets here in this time frame. I mean, your thoughts on that idea? Have we gotten rid of the good old fashioned classic weather scare of the grain markets, Jacob?
Weather scare you have to have weather problems to get that. And me saying that around the guys in Tennessee, Kentucky, Southern Indiana, Southern Illinois, they might get mad at me. But I would say that, realistically, when you look at the entire grain belt, there's problem areas, but it doesn't seem to be as bad. I mean, locally here, and I think right where you're at over there in Iowa today, you went through planting and you saw this 10-day gap. We had moisture built in this area. We had a 10-day gap, and we hammered some stuff in pretty fast, and then you're getting rain on top of it. So it's really hard to look out your window and see problems. When you're in this area, our guys up in the western North Dakota, they have grain, rangeland, pasture land that looks great. Their spring wheat crops look great. So there's areas that aren't used to being good this time of year that have some opportunity. I look around and we follow Eric. We do a lot of stuff with Eric, and it hasn't changed. Like, he knew it was going to be an active spring, but then when does that dryness happen? What happens in the Gulf of Alaska? He said for a while, this could be a weather scare that comes, late summer, a little bit later. We saw some, reports yesterday where you start looking at the end of June, and that's when a little bit above temperature, a little bit of dryness. That's that area. That's probably the time frame that we need to be looking at to say, okay, that's when we could start a weather problem, a dryness problem. Let's just say it that way. That we could have something lead to some substantial. But right now, it looks good. We're starting to get some drizzles here on top of some heat that we had this week. It feels pretty nice right now here in the southwest corner of Wisconsin.
Well, and talk to me about this. What are you hearing on replants? I've heard a little bit of that chatter in parts of the Dakotas, the Red River Valley of the North, obviously. The Mid-South, the Eastern Corn Belt is tough. You get down in Arkansas, I know a lot of problems there, down into the Delta and more. But how much, are we hearing on replant, A, and then B, how much is that affecting these markets? I don't think it's really affecting these markets at all right now.
No, I think that, first of all, we talk about, 83 million acres of beans, 95 million acres of corn. That number, if you start looking at how this acreage number is going to switch, and you bring up the PP acres, and I think a lot of actual PPs depends on kind of what kind of insurance did they take, what is in it for them to get the plant, the crop in, versus taking the PP. So I think that's going to be a very interesting number now. I think when you start thinking about the end of the month, 30 days from now or 28 days from now, and that June 30th report, what's that really going to look like? I think that's going to be a very big challenge. I think you get the Western Corn Belt that had a decent opportunity to get some corn in. And just from talking to seed salesmen, just talking to co-ops, I think that you might even see that Western Corn Belt acreage number grow in corn. Where you get down into that Delta area, some customers down there that I know switched corn to beans because it's getting later. Tennessee, Kentucky guys that I've talked to that have switched to more beans. So I think that dynamic, we might not have a big acreage change, but it just might be where they're at.
I was thinking about this corn market specifically, Jacob. It's struggled here as of late, just kind of chop it around. Can't find any upward momentum. It's found more bearish momentum to the downside, I would say, than anything here. But I mean, you look at the spread action and you look at basis and more, and just, the overall marketing picture in corn. I mean, do we have potential for a positive upswing here as we go towards the 4th of July?
Do we have an opportunity? Yes, there's always that opportunity, but I think it has to come with some type of weather problem. I think that you look at what's coming in from the South America. There's a lot of the private analysts that have even upgraded the safrinha corn crop and what we're going to see being harvested down there. You look at the growing season, and, there's just not enough problems right now, widespread. That puts that supply issue in there. So where does it have to come from? It has to come from the demand side. Exports have been excellent. Exports have been, kept us in the game. But with that safrinha crop, are we going to start competing there? It all boils down to a domestic RVO plan that would come in here and save the day. Would be something that include a little bit more ethanol in there. Hopefully, we get everybody start driving their cars a little more. Get this vacation time moving. Anything like that can help the demand, I think, is where we're going to have to see just it peck away. And it dang sure wouldn't hurt to have some type of trade deal show up that benefits our corn exports and bean exports for that matter.
Well, and to that point, a lot of things in the pipeline that we're waiting on, RVOs for one, and who knows when we're going to get those. We thought it was going to be by Memorial Day. That came and went. Of course, we're tracking the trade deals you mentioned, the tariff situation. That's an on again, off again thing that can kind of chop these markets around. So set all of that to the side from a risk management standpoint. I mean, what should producers be thinking about here now post planting, getting into June? Because trying to focus on all of those unknowns, I think, can be a little tough. So what are just some general thoughts folks need to, think about with the current layout of these grain markets right now, Jacob?
To be honest, I mean, we've taken a little bit of the approach of sometimes no position is a position. Sometimes patience is okay. We're very early in the marketing season, growing season anyway, for the corn plant. And I think that, we've taken a lot less aggressive strategy right now because you want to see some of those problems that we start talking about, waiting for a little bit of a weather rally pop. Seasonally, we have an opportunity in here, not all the time, but it's typically get a chance. One thing that we've done is with some of the tools that are out there, it provides a shorter term. You don't have to go all the way to harvest time to get your risk management, get your protection. Sometimes you can come in here and say, I want to protect myself from here to here. Give me this shorter term using short dated options to give me a certain time frame. Hey, I want to have something sold by this date. Well, let's protect the price to make sure it doesn't go even further by that date. So those are some of the tools that I think the producer really needs to familiarize himself with so they can match that type of risk management plan up with what they need to be doing from a cash flow perspective, or just what their selling marketing plan is going to take hold there.
And that's tools in the toolbox, whether we're talking corn, soybeans, wheat, depending on what variety you're growing, livestock too, which we'll get into that more in a minute. But I mean, we touched on this at the show before. Use the tools in the toolbox at your disposal to help you out when you're navigating uncertainty, right, Jacob?
Absolutely. I mean, the tool that you probably already use, 90% we highly recommend, is the crop insurance. So you have that tool, you've got it in effect, but there's other things that you can use around it that'll help you maximize some of that opportunity. So yeah, putting them all together and knowing how they work together is really key to what your whole operation looks like at the end of the year.
We're having a conversation today with Jacob Burks from agmarket.net. Real quick, I know wheat across the board has had some good days here, trying to put some premium back into that market. Maybe some of that is Russia-Ukraine premium. I know the spring wheat ratings kind of starting out a little tough. I mean, you look across that wheat complex as a whole, anything big stand out to you there as we get into June, Jacob?
Well, yeah, I think the one thing I just glanced at here is Minneapolis. The spring wheat's down about 6 or 7 cents. That we'd really put some premium in the spring wheat in the last week, really, built off of the first conditions report that came out that was the worst in 20-something years, I believe. And we were talking to Tyler up there, talking to some of our guys in Minnesota. They didn't understand that, because what they're looking at wasn't what the reports they were getting from their customers didn't seem to be that bad. And we saw a 5% jump week to week. And I think that, maybe that first one's just kind of beat the spring wheat up a little bit too much. And so now you're starting to pay for the better, a little bit better quality that they're seeing. You look at wheat, we made new lows and contract lows in all three classes in the month of May. So we've seen a little bit of a rally come here, and it's like we're putting faith in wheat, and it's like really because it's just been so bad. We've had very little opportunity to have a profitable marketing plan with any class of wheat. So unfortunately, again, what you're almost you don't root for bad news, but you look at the Ukraine-Russia situation and what actually comes out of there. And where do their talks go? It sounds like their talks broke down again today. So, that is something that we keep our eyes on. So that if they are continuing to not find a resolution there, that could at least allow us into some of these other trade deals that we can get into the EU or something of that sort. But it really has a long road. I mean, even for the corn guy, looking at the wheat market, you're really going to need to see the wheat come out of this doldrum to be able to get any substantial rally anyway, when you start looking at different feed values of wheat versus corn.
Well, we started the show talking about putting logic into these markets and how it seems to be impossible right now. And we should talk about that in terms of this cattle market, Jake.
Yeah.
Let's go over to livestock. And I think at this point, I've had to stop putting logic on some of these moves. Futures, cash continues to be king and leading the way here in cattle. And it's one of those things you just kind of got to sit back and watch and be impressed with what this cattle market continues to do day in and day out.
Yeah, and you start looking at. I look at it with things that I think we talked about this for about a year and a half now, Jesse, about the demand of it. Like where did that stop? And we continued to put a cash price that was higher, and we continued to sell the beef. That moved. We have still moved beef off the shelf. And then you look into the supply situation. We saw that last cattle on feed report that said, hey, there's not a wall of cattle coming. It's not like we pushed everything back. We had weights that are heavier and heavier, and we just kept moving the cattle, and the packer continued to buy, but he still continued to be profitable too with the box beef. So does it make sense? Does it the fear is when does that crash happen? What is the first negative thing that turns the tides? And when you have the fund community holding such a long position, and that tide does ever turn, man, it really feels like one of these marketplaces that we could see that could really chop your head off if and when it does, to start that pullback in this market. But as of right now, you've got cash that's trading 235 area. You got futures at 217. We know there's going to be some type of movement closer together. This is a very non-typical basis that we're watching. And so, yeah, I think there's going to be a lot of movement. I think you need to stay pretty flexible with what you're doing if you're a cattle guy right now.
Well, and I hate to even bring it up, but I think we saw what a headline can do to these markets with that fake screwworm news we had last week. And just thinking about something like that, if that were to occur, just all the positions that are on in this market and just some of that general, uneasiness, I think, fear from the bulls and the bears in this cattle trade. I think we've clearly seen all it takes is one headline, one confirmed something, whatever the case may be, that could maybe potentially be that shoe that drops out of this market. Maybe it's not the consumer pushback on prices and demand at the retail. Maybe it's nothing like that. Maybe it just ends up being a black swan event, Jacob.
Oh yeah, the black swan is something that you don't see coming. I mean, right now this screwworm deal is sitting right in our front of our face, and from what I understand, it seems like to me like the government, the powers that be, are doing some really good things and putting some money in the right spot to keep that control. Read another guy that said, "Hey, it's not if, it's when," and I don't know. I don't understand how that that's going to take place. I don't understand how the demand side of it. I don't understand how they're going to take it. If they hear screwworm, does that kind of equate with some type of mad cow? I don't think so. So I'm curious of how that would all take place if there was a real thing. I think we got a very good look at it though, Jesse. Exactly what you said. What type of headline, whether it's fake or real, is gonna make this market react quickly. And again, I feel like the fund community, the long position that we're holding in the cattle and feeder cattle, the quick exit, the quick removement of money could really make this market move. And right now, the path of least resistance would be to the downside, and it could be very, very detrimental to some guys that have went out there and spent a lot of money buying these cattle, these calves to fill up these lots right now.
Very good point. Very good point. How about over in the hogs? I know you track that market too. And I mean, we're getting hogs kind of chopping around now in this 101 type of range up to 104 futures wise. I mean, what are you watching over in the hog sector right now, Jake?
Well, first of all, in the hog sector, the hogs did not let me down. We are headed to the super regional of the college baseball, so that's a positive thing. So
they got to take on the Tennessee Volunteers, and my wife might have.
Hey, that's what sounds like a bet to me. I guarantee you. Okay, but back in the hog market, what a resilient market we've seen there. I mean, if you look at that chart, just coming from those lows that we made, it was the middle of April when we made those lows. Man, just a very, very impressive move. I think that the cutouts have just the demand that we've seen going into this summer grilling season from beef and from hogs, extremely impressive. You can look at all the economic factors that you want to look at, whether it's what's going on in the gold, what's going on with the dollar index, what's going on in the bonds. All we're looking at is like, how is this economy going to keep moving? And when you look at the beef and you look at what's going on out in the countryside and in the grocery stores, I mean, it still has showed some extreme resiliency. I think that leads right into the hogs being very comfortable over, $1. Again, when you get to very high ends of contracts, when you get to contract highs from a producer, if you're setting out there, whether you're using the two most common ways to protect this price is selling futures or options, or if you're using some LRP contracts, there's ways to make these things work together. And I think this is a very good time to start looking at that and educating yourself.
Well, and I know with hogs, we've had some PERS issues, things like that, but nothing that has seemingly put a lid on this hog market either, Jacob.
No, and I think if that's the case right now is our production's been pretty good, right? So if we had any type of problems, yeah, it'd be great. I look at the exports that we've seen decent, could even get better, and so I think that with these trade negotiations, that's going to move right into effect. I mean, the one on the scales, China. If any of those type of movements, if we can get any type of trade, planned with them, I think that would feed right into a marketplace that's already at contract highs and could go even higher. So I'm not just extremely bullish right now that, hey, this is going to last forever. I hate it whenever times are good. It seems like all we do is look around for what could be bad. What could happen next. We're talking about black swan events or whatever. But I think from a production standpoint, you can't sit here and bet on just keep making new highs. Let them happen, but use some risk management to let it go.
One other thing I want to ask you about, and I saw this note Tuesday morning. I believe it's the big three, I'll call Morgan Stanley, JP Morgan, Goldman Sachs. They're all expecting the U.S. dollar to decline further as we get into 2026. Obviously, you brought up the dollar there. I mean, how much that affects our exports and just these markets in general. If we do see that decline, is that something we think is going to add some fuel and some tailwind to these markets broadly, Jacob?
I mean, I think that when you look at the value of the dollar, when you see it going down, you try to find something positive out of it. I mean, realistically, it's not good for us to have a weakening dollar. But from an agriculture standpoint, you think, oh, good, maybe we can have some more exports. I don't know that a devaluing of the dollar really helps us agriculturally, unless we have some trade deal to go along with that. And if we do have a trade deal to go along with it, it probably does just the opposite and pushes our dollar back up. But yeah, to me, when I saw them come out with that, I did see that same headline, and it was not something I thought of real positively even from our standpoint of exports. I thought, oh man, it's just another sign that, hey, our economy may be in a little bit more trouble than what we're hoping for.
Yeah, it kind of feels like that picture's being painted a little rosier than it actually is, which, we see that happen quite a bit, I would say, when it comes to the broader economy. Jacob, always enjoy the conversation, my friend. I know you guys have a lot of intel and a lot of great folks on your team there at agmarket.net. Folks just need to reach out online via phone. A lot of great ways to get in touch, isn't there?
Yeah, man, just look up agmarket.net. From there, there's an awesome 30-day free trial of everything that we have for you. Take a look at that trial. We'd love to chat with you if you have any questions.
Always appreciate the time. Jacob Burks, agmarket.net. Thanks for joining us on Market Talk today. Have a good one, and best of luck to your Razorbacks against the Volunteers. We'll see what ends up coming from that game.
We'll get a bet going. I'll email you later.
All right, that sounds good. Jacob, thanks for joining us. Appreciate it, buddy.
Thanks.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.